Hello, I am Mijun from Michigan University. We begin today's big news on March 24th. We welcome Mijun, who is consistently maintaining the norm of United States stock investment even today. There is less than a week left in the first quarter of 2025. I'm not sure how much of the many plans you've set at the beginning of the year have been achieved. Personally, for me, compared to 2023 and 2024, this year's performance has not been good so far. I find myself becoming much lazier. So last year, I really didn't take a break and exercised well every day, but this year, there are a lot of days when I skip exercising. As a result, my strength has significantly decreased. So I've been thinking a lot about how to overcome this situation. I'm considering getting some help from the Duolingo application that my daughter uses. I once mentioned on a broadcast that my daughter's proficiency improved a lot after using Duolingo. She has been studying consistently with Duolingo for several months without missing a day, and now she is naturally improving her French skills. It seems like she is getting help from a very efficient system. One particular system is highly effective. For example, if you continue to study for 10 days in a row, 30 days in a row, 50 days in a row, and so on without missing a day, you will receive a reward. Kids really like things like emoticons, especially in the case of my daughter. She likes to collect cute emoticons, so every time she achieves a certain goal, I give her a gift like a cute emoticon. So now, in order to receive this gift, she studies French every day without rest or slack. So if I also continue to do things like running or exercising without slacking off, I feel like I should give myself a little reward. If your plans for 2025 are not going well, this kind of motivation may not be a boost for everyone, but set a goal for yourself to reward yourself for doing something continuously for more than 30 days, 60 days, or more than 3 months. I think it would be good to try this method of rewarding yourself once. Anyway, it seems that the application called Duolingo, which uses such a smart method, is receiving love worldwide. Well, I will try to look at the movements of the United States market with you all today as well. March 24th, 2025 Big Tune News. Let's begin. It's a Monday broadcast. Today, I will try to summarize the situation of the United States market during the past week. First of all, if you look at the S&P 500 index, first of all, it's a mixed situation. Within the same sector, there are both rising and falling stocks mixed together. For example, consumer, cyclical, industrial, and utility stocks. In the case of consumers who ride the cycle, there were also a lot of stocks that went up. Conversely, prominent stocks such as Amazon and Tesla declined throughout the week. Communication services were the same. Google and Meta fell, but many other stocks made a bullish trend, and it was the same when it came to the tech sector. Last week, Apple and Microsoft did extremely well. On the other hand, artificial intelligence stocks showed a minus. However, personally, I don't think it's a bad trend. I'm looking at it like this. Why? Because overall, you can see the color red, but the color is very faint. This is what I mean. To some extent, the downward trend is calming down. Now, I personally expect that each type will show a movement of digging a little bit into the ground, not just showing it. If you look at the market, it's still a very narrow situation. As of last Friday's close, only 33.2% of the 500 companies in the S&P 500 had a positive short-term trend, and 41.15% had a long-term trend still alive. Therefore, the market has not yet shown a trend of rapidly expanding. Next is the volatility index, which is extremely unstable. It has dropped below 20. Usually, when the volatility index falls below 20, it can be interpreted that the atmosphere in the stock market is stable. Because the 200-day moving average is stuck at 1724, just a little more, if it falls sharply in a few more days, we can expect a bullish trend as the volatility index falls below the 200-day moving average. Therefore, the distribution coefficient is showing an unstable movement. Next is the exploration coefficient. The fear and greed index is also slowly rising last week, reaching up to 23 at some point. If it rises a few more points, we can anticipate a breakout from the extreme fear. This is how we can interpret it. The market score provided by the choice stack has now returned to normal. We were able to confirm that the sentiment is gradually improving to normal from the fear phase as it rises to 45. Next is Mise on Top Pick score. Over the past week, Mise on Top Pick had a mix of winning and losing categories. Uber was the best. It has been maintaining a rising trend by climbing 600% over the week and is still being monitored. Peloton rose 547% ranking as the second best performer. Vistra increased 492% Talon Energy, 482% Celestica, 477% and Bitcoin 421%, rebounding to 87,330. Consequently, Street Ice stock surged by 219%, exceeding $300. 1.52%, while the rest of the stocks fell, with 0.09%, 0.51%, Amazon 0.88%, Alphabet 0.91%, Meta 1.87%, Broadcom 1.98%, B2 2.33%, Nvidia 3.26%, and Credit Technology 5.72%. Lastly, Innodata fell by 13.2%, making it the worst performer. I was saying earlier that the United States stock market is watching me sweep the floor, but fortunately, the United States stock market ended in the plus for the past week. And this has an extremely important meaning. This is because the United States stock market, which had been closing in the minus for 4 weeks, finally recorded a plus last week. And if you look at the current poll numbers, all three major candidates are making a close race. Especially in the case of Nasdaq, which we are concerned about, the futures index is showing a rising trend of 1.18%. Well then, can such a rising trend continue during this week? Of course, the situation is most important. I will start this week's broadcast with an article related to this. What are the stock market trends in the United States and Europe on Monday? The April tax cuts by President Trump are being taken more seriously than we expected, leading to a rise in the market. We'll have to see what this is all about. According to experts familiar with the issue, the next United States tariff measure, scheduled for April 2nd, is expected to be more targeted than the blanket tariffs President Trump has mentioned so far. The story is not about imposing tariffs on all countries, but limiting them to certain countries, and this is the message being conveyed. As a result, the market trend is currently improving. Despite this, stakeholders in China and the European Union warn that United States trade policies could have a widespread impact on the global economy, while traders remain in a state of tension. President Trump on April 2nd is talking about a naval blockade, a term he's been using. He is currently preparing to make a formal announcement. He is planning to announce tariffs on other countries, including longtime United States allies, as a countermeasure against their tariffs and other barriers. To explain reciprocal tariffs again, if you charge us 10%, we will also charge you 10%. It can be understood in this way. As you can see here, it says tariffs and other barriers. The reason why it says other barriers is because some countries are imposing non-tariff barriers in various ways. This is what's happening right now. What does this mean? It could be government subsidies or additional taxes. In a way, they are using loopholes to increase some tariffs. This is what Trump is thinking. President Trump plans to announce a wide-ranging tariff on countries or blocs, but some are expected to be exempted. And currently, President Trump is not planning to announce separate tariffs for each sector from the same action, as he mentioned when he was in office. Therefore, compared to the past, there is a lot of distributional feeling that has disappeared. The first was to impose tariffs on all countries worldwide, and this was announced, but in reality, there is a high possibility that limited tariffs will be announced for certain countries. The second is that there was a plan to impose separate tariffs on each industrial sector, but there is a high possibility that this will not be announced either. Because of these reasons, the atmosphere in the United States stock market is gradually calming down, and this can be understood. However, President Trump wants to see immediate effects through tariffs, and plans to announce tariffs that will take effect immediately. This will be announced on April 2nd, taking effect immediately. This is the anticipation currently being diffused. And what is this approach? It could potentially exacerbate relations with allied countries, and at the very least, it could provoke some retaliation and possibly lead to a rapid expansion. In response to this, the Chancellor of Germany, Angela Merkel, warned that the new policy of the United States could have the same impact on the world economy as the Great Depression. China's Premier Li Keqiang has said over the weekend that China is prepared for an unexpected shock. Many of Trump's policies and procedures remain fluid, creating an unpredictable situation. No final decision is made until the president makes an announcement. Therefore, since there is still more than a week left until April 2nd, many things can happen in between, it seems reasonable to think so. April 2nd will be the day of reckoning for the United States. We have been victimized by all countries around the world. Friend or foe, that's what President Trump said last Friday at the White House. He claimed that such a policy would bring in hundreds of billions of dollars in revenue. Another report suggests that due to these tariffs, there could be a revenue of several $billions over the next 10 years. However, recent officials from the Trump administration have said, the target country list may not be comprehensive. This means that focus may be placed on certain countries. We can predict this. For example, if you look at the situation of each country's debtors in the United States in 2024, some countries are problematic. For instance, if you look at China at the top, it exceeds $295 billion. Second is the European Union with $236 billion, and third is Mexico with $181 billion. In addition to that, countries like Ireland, the Netherlands, and Canada have a disproportionately large number of tax evaders, which is why there is an expectation that some countries may be targeted for tax collection. And also, existing tariffs such as those on steel will not necessarily be reduced. There is a high possibility that they will not become double tariffs. Therefore, in this case, Trump administration officials have recently publicly acknowledged that the tax burden on the relevant part can be significantly reduced. And this is already a departure from Trump's original plan to impose a global human tariff across the world. Therefore, it is understood that the atmosphere is gradually being completed little by little due to such changes. Well, I will summarize it in one word of Mijihun. The United States is a perennial trade deficit country. However, typically, if a country continues to show a trade deficit, the value of that country's currency tends to fall. And if the value of the currency falls, after all, imported goods become more expensive and exported goods become cheaper, right? So, it's a common economic principle that the trade deficit naturally tends to improve. But the problem is that this economic principle does not apply to the United States. Even in a situation where the United States dollar is continuously depreciating, its value is actually rising. The reason why the United States trade deficit is not improving as expected is precisely because the value of the dollar continues to rise. Can we summarize it like this? There are two reasons why such a serious problem occurs, and the first one is the currency manipulation that is happening repeatedly in many countries, including China. And the second one is countries like Japan and like China that are raising a lot of black money in trade with the United States, and they take the dollars earned in such trade to their country without releasing it. This is because they are investing again by buying United States national debt. If they keep investing in United States national debt, the dollar's value may continue rising, potentially leading to a sustained increase in the dollar's value. Yes, so that's why Trump is. In order to take advantage of such a situation, Trump has a point that he will lower the interest rate of the United States national debt. If the yield on United States government bonds falls, the demand for dollars will decrease, right? If this happens, the value of the dollar could stabilize and the trade surplus could improve. Thus, we can interpret the rationale in this way. Well, but Trump is not satisfied with this, right? In cases like Trump, he is using tariffs to protect against currency manipulators, as it appears. In the long run, it seems to be a fundamental solution that can benefit the United States economy and United States companies. However, in that process, many twists and turns can occur, volatility can intensify. This is what we can predict. And one more thing in the end, we're handling the increased risk of a heated race, which is significantly higher than before. Now push the pad accordingly. The important reason is right here. When signs of a slowdown in the race appear, if the interest rate is immediately lowered, such risks are mitigated. So does Trump, who knows this well. He is seen as completely ending his worries about inflation in order to end the Ukraine and Russia war soon. Therefore, it seems possible to conclude that there is a rising expectation in the market that the war will end soon. The next article prepared is a forecast about the United States stock market. The United States stock market forecast we will look at this time is the forecast of Mizuho. Let's take a look together. The United States stock market closed positive last week for the first time in a while due to the Federal Reserve Chairman's dovish stance. In other words, as expectations rise for the Fed's move to block the downturn of the United States stock market, the United States stock market is showing an upward trend. That's how you should see it. I'm going to show you the two charts below. What about the second one? It shows the reason why the United States stock market can show an upward trend in a simple way. You should see it this way. Let me explain a bit about the first picture. There is something called a summary of economic projections that the Federal Reserve announced last Thursday. It's called the Summary of Economic Projections. One of these is the dot plot, which summarizes the economic outlook inside, and one element of it is now the dot plot. We took a close look at the dot plot last week. And now, since the content of the dot plot has not changed much compared to December, you can see that the evidence is now being provided. Well, there's another part we need to focus on here. First of all, it's about inflation concerns. How many of the 19 Federal Open Market Committee members are worried about the uncertainty or risk of core PC inflation? It increased slightly in December. The thing on the left here is uncertainty, right? This is now uncertainty. So we don't know where this number, which we call the base PC, will go in the future. The uncertainty has increased. The number of members who think this way was on the line in December, but it has gone up a little more than the line. So the worry has grown a bit more, you can see it like this, but it hasn't changed much. On the right side, there's a risk. Where is the risk? The base PC inflation could rise further in the future. It could rise, it's carrying this worry. Last December, 15 people were worried, but this time, with 3 more added, it increased to 18 people. So if we organize it, the worry about inflation has increased a bit more than in December. Many members are worried. You can see it like this. It is very clear that the annual members have not yet relaxed their vigilance about the risk of inflation. However, there is one more extremely important picture. This picture allows us to see at a glance how the 19 members of the Federal Open Market Committee think about the United States economy and how their thoughts have changed. The number of committee members who indicated that uncertainty about future United States gross domestic product growth has increased was 9 in the last December. But this number suddenly increased to 17 in just 3 months. And if you look to the right, the number of FMC committee meetings that indicated the risk to gross domestic product growth stagnation was only 5 in last December. But suddenly 18. What does this mean? In conclusion, we were able to observe that over the past 3 months, there has been a rapid increase in uncertainty about the United States economy and concerns about economic slowdown risks among the board members. Of course, at the same time, inflation concerns remain extremely high. And this is the biggest risk in the United States stock market in the current situation, I think. Absolutely, inflation cannot continue. This is the key point now. I think you can see it this way. However, if the core personal consumption expenditures index to be announced this Friday shows a healthy number, if the war in Ukraine or Russia can end for a while, the Federal Open Market Committee's concern may shift from inflation to economic slowdown. The possibility is very high. That story can be understood as a signal that the possibility of the Fed's support for the market is gradually increasing again. Well, for this expectation for the Fed's support to continue, the concern about inflation will not grow any further from here. Therefore, the PC price index to be announced this Friday is really important. You can see it this way. For reference, if you look at the market's expectations for the core PC to be announced on Friday, March 28th, the core PC index rose 2.6% compared to the same month last year, and economists are now predicting that the core personal consumption expenditures will rise 2.7% compared to last year in February. Therefore, if the 2.7% is correct, or if a lower number than this appears, the United States stock market will be able to maintain its positivity. We can expect this. The next prepared article is about Nvidia, and personally, I think there is an incredibly important opportunity to buy Nvidia stocks at a low price right now. In this article, I would like to explain the reasons for such an evaluation one by one. Last week at Nvidia's annual GTC Developer Conference, Chief Executive Officer Jensen Huang presented a vision for the artificial intelligence industry and also announced an aggressive roadmap for Nvidia's future products. They have just started mass production and release of the Blackwell graphics processing unit, but they are not satisfied with that. They continue to show an aggressive strategy by announcing this and releasing that in the future. As a result of such announcements, it can be speculated that it will be difficult for competitors to catch up with Nvidia for several years to come. Walking around the GTC marketplace, you can feel the excitement as hundreds of people line up to learn about the latest artificial intelligence advancements in all fields, including robotics, medicine, supercomputing, server design, and more. Therefore, interest in these artificial intelligence capabilities is growing rapidly. Being able to confirm this at such an exhibition that we are just at the beginning of this revolution is truly enlightening. The problem is that the connection with the investors has been severed. Despite the enthusiasm about artificial intelligence and the future, and the fact that Nvidia is at the heart of it, Nvidia's stock has recently been hit by a major adjustment, trading at a price that is 26 times its net earnings. In fact, if you look at the forward price-earnings ratio now, it has fallen below 26, down to 25.97. So, without any discount, the stock trading at this cheap price is Nvidia. And this is a company that is expected to increase its sales by 57% this year at a ridiculously low valuation. Well, besides this price-earnings ratio, we have something called price-on-earnings to growth, right? Price-earnings to growth is when we divide the price-earnings ratio by our growth rate. And if this falls below 10, it's really a company with high investment value. We can calculate it like this. What does that mean? If the per-share net income is traded 26 times, if the growth rate exceeds 26%, it's extremely high in investment value. We usually evaluate it like this. But in the case of Nvidia now, they expect sales to increase by 57% this year. And even then, if the price-earnings ratio falls below 26, you can see it like this. This unusual phenomenon appears due to three concerns. Here's how to organize it. The first is the strengthened concern that the demand for artificial intelligence chips may decrease after the efficient model of Indices, a Chinese startup, is launched. The second is that the competition with Broadcom's custom chips is intensifying. This is the second concern. The third one, uncertainty has increased as President Trump threatens to impose tariffs on chip imports. For these three reasons, Nvidia's stock has fallen for a while. You can see it this way. However, at GTC, Jensen Huang mentioned all three issues, saying that none of them could overshadow Nvidia's bright prospects, thus reassuring the market. First, about the chip shortage. Jensen Huang was particularly proactive. Let's hear what he had to say. In his keynote at the GTC, he highlighted that the demand for computing resources is increasing significantly because it takes more time to get higher quality answers from the artificial intelligence models in the chip shortage, thus requiring more computing resources. So what does this mean? What this means is, whether it's the G-miner we've been using before, or if you ask a question in ChatGPT, you get an immediate answer. The thinking time is extremely short, but in the case of DeepSeek, even if you ask a simple question, it takes a long time to get an answer. And it shows you what kind of thinking it's doing, what process it's in, and how it's coming up with an answer to such a question. That story is about how computing continues to operate in this situation that the computer is running. That's what I'm talking about right now. Such a type of reasoning is increasingly being used in most top artificial intelligence models, and a trend has been observed. So the whole world is misunderstanding, as Jensen Huang mentioned. The computational power required for artificial intelligence agents and reasoning has increased by up to 100 times more than previously estimated last year, according to his claims. It's a surprising news. So, not only training, but now we are moving into the era of reasoning, and if the number of reasoning-type applications increases, the more they increase, the more computing power will ultimately be needed exponentially. This can be understood in this way. The second one is a matching type. Huang, Broadcom's chief executive officer, states that Broadcom is a custom semiconductor called AC targeted at specific applications for major tech companies. Yes, the demand has increased significantly as we produce such semiconductors ourselves. Therefore, we will occupy a fair share in the artificial intelligence chip market by 2027, which we have talked about quite often. Therefore, our concern about Nvidia has grown because of this, you'll see. Now, what about Jensen Huang at GTC? He responded to such a situation. He responded like this when asked about Broadcom after the GTC keynote on Tuesday, where many A's were cancelled. A's should still be more superior than the best box. But now mega tech companies are going to use it. But how can a company like Broadcom know that they will be optimized, and why? Because they just receive orders and produce. How can they know how the semiconductor should be divided? How can these companies know? They question like this. And they raise the question of how such chips can be mass-produced. What is the clear message of Jensen Huang? Broadcom's products ultimately cannot compete with Nvidia, he said. Lastly, Trump's tariffs remain a lingering issue. Jensen Huang predicts at the Wednesday press conference that the company's operations or prospects will not be significantly affected by the tariffs. He stated this with certainty. He also gave reasons for this. Nvidia owns a public company network that is vulnerable and has the ability to move orders to countries with lower taxes as needed, as revealed. And another thing, Nvidia plans to introduce more manufacturing facilities in the United States over time. It was added. For example, Taiwan Semiconductor Manufacturing Company is currently continuing to build factories in the United States. Such influence will be positively developed, that's what I'm talking about. Nvidia has made a point that the overall market opportunities for artificial intelligence and data center infrastructure are rapidly expanding. Jensen Huang predicts that the industry will spend about $500 billion on data center infrastructure this year, and by 2028, it is expected to increase to over $1 trillion. Furthermore, Nvidia's graphics processing unit chip business is expected to take up a larger proportion in the coming years. Even without this, the current graphics processing unit market share exceeds 80%, and it is understood that such a market share will not decrease absolutely, and this can be interpreted as a self-confidence. And part of that is, it is expected that more and more NVIDIA GPUs will be installed in data centers. What does this mean? This means that they are now selling GPUs in large quantities all at once. We call this a supercluster. Over the past year, the scale has grown with over 10,000 GPUs up from 16,000. We're talking about bundling more and more GPUs and now selling them as packages and as systems. And what about Jensen Huang? It is confirmed that several clusters consisting of hundreds of thousands of GPUs will be constructed by 2027. Therefore, now it's not about making hundreds of thousands of pieces, but it's planned to sell clusters that make hundreds of millions of pieces, and this is how the certainty is revealed. And another thing, he also presented a very bright future about the future of robotics. According to Nvidia's Chief Executive Officer Jensen Huang, we are at the beginning of a phase where artificial intelligence and robotics development is increasing at an exponential rate, he said. He highlighted that the groundwork for major advancements in robotics is being laid due to the combination of increased computer power and more sophisticated artificial intelligence models. He predicted that within the next 5 years, especially in the industrial sector, hundreds of thousands of humanoid robots will be in use. If such a thing actually happens, it would mean another huge growth driver for Nvidia, which makes the hardware brains of robots, he added. Indeed, the most significant development at GTC was Nvidia's aggressive product roadmap. Jensen Huang announced in his keynote that Nvidia's Blackwell Ultra artificial intelligence server, scheduled to be released at the end of this year, will be 50% more powerful than the current model Blackwell, he announced. And then there's Rubin, which is set to be released in the second half of next year. The Rubin artificial intelligence server will be 3 times faster than the Blackwell Ultra. And in the case of Rubin Ultra, which is scheduled to be released in the second half of 2027, it will be 14 times faster than the Blackwell Ultra. He revealed these facts. So now this performance is rising dramatically. Therefore, it's understood that he confirmed once again that we can't use another chip. The Nvidia chip is the best. Anyway, the Nvidia stock is rising. Even after this news was released on Tuesday, there was almost no change, and it ended with a slight drop in the overall market on Friday. However, insiders in the tech industry already understood the importance of this GTC announcement, and eventually, investors will also understand. It seems possible to understand this. Well, let me show you one more thing. I would like to share with you the forecast of NVIDIA's sales expectations. What about Jensen Huang? The industry is expected to spend about $50 billion this year for data center expansion, as it has been forecasted. The problem is that Nvidia's fiscal year, that is, the fiscal year ends in January 2026, and the sales forecast is $20.43 billion, as you can see here. The current sales forecast for Nvidia is $20.4 billion in the fiscal year ending in January 2026. So, as shown here, out of the $50 billion Nvidia takes or controls, $20 billion you see, what does that mean? It's curious who will take the remaining $30 billion. Why? Because based on last year, 2024 Nvidia's data sales were $11.52 billion. Well, this is doubling and increasing now. And for AMD data center sales amount to $1.26 billion, $1.22 billion, and $300 million. So even if these companies double or triple their sales, if Nvidia can't raise its sales beyond $20 billion in the end, they can't even reach $50 billion combined. Therefore, it's not easy to find the remaining $30 billion of market cap. That being said, the current $204.3 billion is a very low estimate. This is how it can be understood. Jensen Huang mentioned that the data center's self-funding will exceed $1 trillion by 2028. The sales forecast for fiscal year 2029, which is in 2028, is $277 billion. So it doesn't even reach $300 billion. So what does that mean? It means we can only ask questions like, who will take the remaining $700 million out of $1 trillion? Therefore, I believe that Nvidia's consensus can only continue to rise in the future. Over the last half year, Nvidia's projected sales for 2026 rose 15.6%, 2027 by 21.5%, and fiscal year 2028 by a substantial 28%. Therefore, the current consensus continues to be adjusted upwards, and in my view, there is a high possibility that such upward adjustments will continue to accelerate in the future. The last prepared article for today is about Tesla, and last Friday, Tesla's stock price surged more than 5%. And there was a word from Musk there. Musk told Tesla employees not to sell stocks now, because if they sell stocks now, they are a fool. He conveyed such a message. So for a while, there will be a huge hype about Tesla, and it is understood that the anticipation has increased. Today, I recommend you to check this article with my voice imitated by artificial intelligence. Today's broadcast ends here. Thank you for being with us from the first broadcast of the fresh week to the last. We all fight together until the day we retire our investment in United States stocks. Have a happy day, thank you. The scandal of Musk's mentioned artifact destruction is a case that occurred amid growing backlash against the role Musk is playing in President Donald Trump's policy department. The city of Sydney is targeting Tesla's supercharger stations in the United States and Europe. Tesla's deliveries generally decrease every quarter, but sales and production have all sharply decreased in the main market since the beginning of this year. In addition to political backlash, they have also reduced production of Model Y, the most popular car, and have started to make a redesigned version by reworking and replanning the production line for other reasons. What is our popularity like? Well, we are literally making the most sold car on the planet. Any kind, really. Musk talked about Model Y. Tesla has revealed that it will launch a cheaper and new model in the first half of this year, but it has not detailed what model that vehicle will be. The reaction to Musk was Trump promoting Tesla vehicles at the South Lawn of the White House on March 11th. This week, Howard Lutnick, the chief executive officer of Cantor Fitzgerald, appeared on Fox News and urged viewers to buy Tesla stocks. Lutnick said that there may never be another opportunity to buy Tesla stocks at this price, which could potentially violate internal regulations of the Department of Commerce. Musk has said that there will be difficult times for Tesla employees. However, what I want to tell you all is that the future is bright and exciting, and we will do things that no one else has ever dreamed of. Ives, a Wall Street analyst and longtime supporter of Tesla, said this meeting was Musk's first step in showing his intention to lead Tesla through this turbulent period. Ives also fired a warning shot at Musk earlier this week, urging the billionaire to refocus on Tesla amid scrutiny from the Trump administration. He warned that the brand damage has escalated into a tornado-like situation for Musk and Tesla. Musk has previously gathered Tesla employees to set examples, such as reducing expenses in 2020 and increasing production, but generally did so through internal emails. Tesla has never held a public all-staff meeting like this before. After giving a speech on stage for about 30 minutes, Musk answered questions for another 30 minutes. When asked if he had ever considered making airplanes or cars, the chief executive officer said he had considered electronics. In fact, Musk likes the idea of making airplanes, but he said there's not enough time right now. I'm doing 17 things. Musk has considered making a jet that runs on electricity, supersonic, and vertical takeoff and landing. He said, I don't know if that will ever happen. Thanks to Musk's optimistic message, Tesla's stock has risen sharply for the first time in a long time. In the short term, we need to see if it can turn the tide back to the $270 level that had been a downturn. In my personal opinion, I judge that it is difficult to turn the long-term trend as long as Musk's political behavior does not stop. Nevertheless, the reason why Tesla's stock is still in the top pick despite the downturn is because of the potential for a supersized recovery coming this year. In the end, we are expecting that Tesla's stock price will rebound to its peak as big news about the self-driving that we have been waiting for 10 years appears, and a new electric car model from Tesla that has not appeared for more than 5 years after the launch of Model Y. Nevertheless, the reason why Tesla's weight is the lowest in my current portfolio is because there is no certainty about when these news will be announced. Thank you.